What is going on, investors? Back again. Time to take a look at Salesforce.com, ticker symbol CRM. This is a stock that was up about 3.5% today. And you can see in the after hours, boom, we're up 10%. How come we're up 10% in the after hours? Well, they just reported earnings and they were a blowout winner. And so we'll come in here and we'll take a look at the revenue, the profits, a little bit more deeper numbers here. They also raised guidance. So we'll talk about that. And then finally, we'll get over the stock chart. Here's where the stock was trading today. It actually gapped up a little bit today. And then look at this. This is like Michael Jordan jumping up and dunking on someone. It's raised up even further. Look at this big gap that we've created on this chart. Unbelievable move in CRM. So when we jump over the stock chart, we'll talk about this. This is a $195 billion company already. And for it to move 12% in a day just shows you this market is on fire, especially for tech stocks. Now, Salesforce was added to the Dow Jones Index just today, I believe. And so Salesforce.com, Amgen, and Honeywell got added in, and ExxonMobil, Pfizer, and Raytheon got booted out. They really have Apple to thank, because when Apple split its stock, Dow is a price-weighted index, and so Apple's stock, by going down in quote-unquote going down in price because of a stock split, actually had the Dow Jones having to rebalance, and they decided to add Salesforce.com into the mix. So that's kind of interesting. Now, so we raised full year 2021 revenue. So it went from 20.7 billion to 20.8 billion. That is 21 to 22% year over year growth. That's absolutely fantastic. Again, this is their guidance for the full year, believing that it's going to come into this range. So we just reported Q2. So what they decided to do was give you guidance on Q3, and they think it's going to come in between 5.24 billion to 5.25 billion. That's 16% growth year over year. And this is in a tough economic environment. So we raised our guidance for EPS, raised our non-GAAP EPS. I mean, they just raised full year operating cash flow. I mean, everything just is firing on all cylinders over at Salesforce. Mark Benioff must be on fire today. So let's jump into the statement of operations. This is our most recent quarter. This is Q2 for Salesforce. We have 3 months ended here, 1920, and then we've got 6 month ended here, 1920 as well. We see the most current quarter, we ticked up a $1.1 billion. And so I want you to pay attention to what's going on here, because I showed you, look how much this stock is gapping up. I mean, I have to push the stock up, even the chart up even more every single time. This stock gapped up huge. And so whether or not you're interested in Salesforce, pay attention to what investors really like. And it's something I've talked about on the channel. They like top line growth. This is solid top line growth. This is their biggest category. They've got a little bit of revenue here in professional and other, but the majority of their business is here. So we've got total revenues here at 5.1. That compares huge over the previous period, which we were at about $4 billion. Now take a look at these gross margins. So here's the combination investors love. They love quick top line growth. I mean, we grew top line by over $1 billion just in the last year. And look at these margins. We only spent $1 billion to make 4.8. And this product and service looks more of kind of like a loss leader. They're not losing money, but it's kind of a break-even business. Our total cost of revenues to make $5.1 billion, all we had to spend was $1.3 billion. That is absolutely phenomenal for a gross profit of 3.8. That's over $800 more. $800 million more than the previous period. As you see for the 6 month, it's accelerated nicely as well. We went from 5.8 billion up to $5 billion in gross profit. Now, what's also nice is this is I don't want to say a mature company, but it's been around a while. And so the rest of their cost structure is already in line. You're not seeing massive losses down here. Research and development ticked up a little bit. Marketing and sales ticked up a little bit. Got to imagine when you accelerate revenue like this, you're going to have to pay a little bit more to the marketing staff. And then finally, general administrative nicely as well, but well within line to what we were expecting. Total operating expenses went from about $3 billion up to $3.6 billion. Again, we made 3.8 on the gross profit line, adding back in some tax and some other stuff. We come down to a net income here of $2.625 billion. Looks like we had a nice little income tax benefit here as well, because we only made about $91 million in the previous period. We see that net income absolutely accelerated big time for the last 6 months as well, primarily due. Okay, so I would guess this net income number is not necessarily going to repeat itself. It looks like we've got a benefit from some income taxes here. There's a footnote as well. And so we can see here that this company benefited very nicely from some kind of intra-entity transfer of intangible property. So I think they might have sold some of their stakes in Zoom Video and things like that. And so they got a lot of profit out of that. So what I would encourage you to do is really focus on this operating gross profit and this operating expenses. And then finally, our income from operation is right here. So we went from 58 to 178. Okay, this is the repeating business right here. Income taxes, sale of stock, things like that don't always repeat. So we went from 58 all the way up to 178. That's absolutely phenomenal. If they can continue that type of growth, that type of performance in the quarter, I think investors will be very, very excited. Now, moving down to the balance sheet, how well capitalized is this company? I think you can imagine this is going to be a crystal clean balance sheet. So we have marketable securities here. That's essentially cash. And then we have cash and cash equivalents. We have from January 31st to July 31st, so about a 6-month view here, we had $9.2 billion, and most recently that compares to about 7.9-ish. So we've ticked up in the cash portion of our business. Total assets at about $57 billion. That's about $2 billion more than about 6 months ago. Now, from the liability side, it is crystal clean on here. So we have some non-current debt, but it's not very much. In fact, it's the same from about 6 months ago, and it's only about $2.6 billion. And this company has plenty of cash on the balance sheet to wipe that out if they wanted to. Everything else looks absolutely crystal clean here. We have $19 billion in total liabilities, and we have $57 billion in assets. This is, you're looking at a tech balance sheet when it looks that good. Now, a little bit deeper dive into the numbers. You always want to see, well, maybe it was just one part of the business doing well, or maybe maybe there's other parts of the business declining. Those kind of things that you do want to look at. So we have the sales cloud here, and we see that ticked up nicely in the last 3 months, and it's ticked up nicely in the last 6 months as well. We have the service cloud that grew almost 30%. It looks like that ticked up nicely. Same for the 6 month. The Salesforce platform and other is ticking up nicely, although I think that's kind of a low margin business for them. And then finally, we've got the marketing and commerce cloud that ticked up as well. That just shows me every single one of their business units are ticking up and is seeing growth. And we see from a geographic perspective as well, it's doing the same thing. We're seeing across the entire globe, their products are in demand and continue to go up. That is a great sign for investors. Now, what's an unfortunate sign for investors is how much this stock has actually gapped up. This is if you don't own the stock. If you own CRM stock, you should be doing a little dance right now. I'd maybe grab the golf clubs and set up a tee time tomorrow and go play a little golf, because this is an absolute blowout winner. We were in a defined uptrend here with this stock. This stock's, made a low down here. I've got to readjust my chart. We were all the way down here at $124. We had a monster run like most tech stocks, came up here, made new highs right in the over $200 range. Today we were at $215, $217, and now look at where we're at. We're all the way up here, $240. Guys, this stock is on an absolute runaway train. This is like Michael Jordan doing a windmill dunk on somebody. This stock is just absolutely blown it out of the park. Now, would I come in here and buy shares at this 240? Probably not. This stock has gotten way over its trend. What I would like to do, what I do in these situations, I wait for this stock to flatten out here. Maybe we retrace a little bit, but when they gap up like this, who knows what it wants to do. It could keep running for sure to the upside. It could come all the way back down and fill this gap all the way back down to 218. I really don't know. I don't like to gamble in that sense. I'd like to wait for some price action, kind of wait to see what happens. happens, but this stock literally did a double gap. I mean, it gapped here and then it gapped here. Almost reminds me of like the silver chart. We saw silver do a similar thing this year where it gapped, and then it gapped all the way up, and then eventually it'll flatten out. This, I would encourage you, if you want to get into this name, wait for it to flatten out a little bit. We've got huge volume today. There are a lot of people that jumped into this. This stock is going to stay elevated. These numbers are sensational. The guidance was maybe even better. I mean, we're guiding for basically the same, a little bit better quarter actually in the next quarter, and they're actually giving you full 2-year, 2021 revenue guidance, which is 2 quarters forward at over 20% growth rate. And so this company is firing on all cylinders. I can see why it is accelerating in the after hours. And Mark Benioff is the type of CEO, he's going to get on the conference call. He's probably going to make people even more excited about this stock. So the stock I love, they have great leadership, great product. Certainly wish I had some shares of it. It is a little bit extended right now. I think you can wait for not necessarily a pullback, but wait for those shares to flatten out a little bit. Might give you a better entry point than trying to, catch a tiger that is running full speed away from you, which is what CRM shares are doing right now. So hopefully you guys enjoyed this one. We'll be back again very soon. Good luck with all in your investments.